I'm looking at quotes from TradeGate that suggest your stock could be down as much as 10% at the start of trade today. We'll see whether that comes to pass. But if that does happen, what would you say to the market?
Well, look, thanks for having me first. I think it's been a very strong first year of transformation for us. I'm very proud of the progress that we've made as a company and also of all our people. We've set ourselves and built the foundations for growth. We said this is a transformation journey. It's a midterm plan for 5 years. And I believe we made significant progress in the first year. Amidst all of that change, as you pointed out, we delivered growth both on total revenue as well as on product. We have won 342 new logos, and that is setting us up for really strong acceleration in the next year. And you can see in terms of the outlook we've given for 2020, which is a growth of 10 to 15% on our digital business, a growth on 40 to 60% on our IoT business, and of course very strong investment that we're going to put into further accelerating. And our midterm guidance, as you have seen, has also been increased to 15% CAGR, and we are very confident of hitting the 1 billion mark now, getting into 2023. So I think all in all, we have set ourselves very strong to step into now 22, and I believe this is the year we are going to deliver very strong growth.
So you sound very confident, Sanjay, but if the market does send your stock down considerably, what are they missing in that positive narrative that you've just given us?
Well, I think what they are missing is to look at the market opportunity, the fact that cloud and hybrid cloud is growing at 20% year on year, and the fact that there is a very high need for a thin integration, independent layer that companies need now to be able to navigate this multi-cloud and this global polarization of platforms. And Software is very well positioned to be able to help companies. In fact, our recent 5-year significant deal win with Schindler in IoT and integration is a very clear example of how we are winning in this market. So I think the investors, the ones who can see the transformation, are looking at the signs of whether we are setting ourselves to win in the market and are we well positioned. And if you look at competition, we are beating competition heads on. And I think those are the signs that the leading indicators are the ones that help these companies. Another leading indicator, by the way, is recurring revenue. We have grown our recurring revenue 10% year on year, and our shift to subscription has moved, and our percentage of subscription is 51% now, which is double what we had last year. So we're becoming a lot more reliable on our performance, on our revenue, and we are opening up the doors to a set of customers we never could attack in the past.
Sanjay, you started out in, I think, the end of 18, but you really got your feet on the ground, got your 5-year plan down at the beginning of last year, and since then the stock has really been on a tear. If you do start to see a 10% decline today, or stock coming down on days when you don't think it's necessary, do you have a plan in place to buy shares back yourself, or, for the company?
Well, as I said, the market is growing in a very strong way. We see tremendous opportunity in this market. We obviously are looking at what to do with. We have a strong cash flow, as you know. We have the ability to raise a very high amount of money if we want to do acquisitions. So all of these options are obviously on the table, including share buybacks. But the way I see the market right now, we have very strong opportunities, and so we would be looking at what is going to help the company grow and demonstrate and capitalize on this market opportunity rather than only one option.
You didn't engage in as many acquisitions last year. You made a big one in 2018 of Mindtender and Build.io. Do you think that's part of the strategy for 2020? Are you looking at possible targets for this year to grow in cloud, to grow in Internet of Things?
Yeah, Matt, for me and for our company, it was very important in 2019 to establish a very clear path to organic growth. And we've done that. We are very confident of hitting the 1 billion mark, as I said, by 2023. Now, obviously, we are a lot more stable. Our foundation is set in. Now is a time that we can look at opportunities in the market. And absolutely, we are looking at opportunities. But I was also very clear, this is going to be very much in our strategic direction of integration, API management, IoT, and analytics. We are the only provider that brings together IoT integration and integration flow technologies, and we want to be really the market leader in this space.
What can you tell me, Sanjay, specifically around sales in the United States? Because some analysts have been concerned there.
Yes, indeed. As you know, we hadn't grown for the last 8 years. So, there were some bad practices in the U.S., some, underinvestment in the market, and we have addressed that in the first half of 2019. As you knew, we had to take down our DBB guidance to be able to adjust to the real situation in the U.S. However, we've taken on these challenges head on. We've really sorted out our problems, and U.S. demonstrated very good performance in Q3 and Q4. We have a very stable team now. I think we are really positioned now to win and grow in the North American market. And in fact, our plans for 2020 are for significant growth in U.S.